Welcome back to Reimagine 2020. I'm Yonah Hochhauser, and today I'm glad to be joined by Michael Shaulov, CEO and co-founder of Fireblocks. Michael, thanks so much for joining us.
Yonah, thanks for having me.
Well, glad to have you here. And first, maybe let our viewers, know a little bit about kind of who you are and how you got into blockchain.
Yes, sounds good. So actually, I didn't come originally from the financial background like many people in the blockchain space are. Last 20 years I spent in the cybersecurity space. So many years ago, about 2 decades ago, I started in the Israeli Cyber Command in the Unit 8200. And then sort of fast forward into 2011, started my previous company, which was called Lacoon. We did mobile security for enterprise companies. Essentially, 10 years ago, there was such a thing that people were buying smartphones. It was new and exciting. And then the people were coming to work and asking their IT managers to connect them to the email. And the IT manager would freak out. So we basically created a platform that helped them to do it in a secure fashion and predominantly basically protect those mobile devices from a variety of cyber attacks. We had a pretty good run over the course of 4 years, and then we got acquired by a company called Checkpoint. So Checkpoint is the biggest cybersecurity vendor, about $20 billion company in a good day of the stock market, and they invented the firewall back in the 90s. So after we got acquired, I was essentially running their mobile and cloud security portfolio, taking them from the more the traditional IT security type of systems, such as firewalls, to essentially the way that IT should look like in the next decade or so, right? Mobile, cloud, all the new infrastructure. And interestingly enough, because we were sort of experts in mobile security, in 2017, myself and the team were essentially were brought into investigation in South Korea, cyber investigation in South Korea, where 4 exchanges got hacked over there. So they were basically hacked by the North Koreans, and they were able to steal $200 million worth of Bitcoin, right, from those 4 exchanges. It's a fairly famous case, and we were brought in because the hackers used some form of mobile malware, and we helped in the investigation. But that's, I think, was sort of, I was clearly familiar with Bitcoin and some of those things, but I was not really personally involved in that market, and that really triggered my interest. Started to learn more and more about the topic. Predominantly, as personally, I come from more the enterprise business-oriented type of startups or companies. I was really interested in understanding what institutions and banks and hedge funds and more than one person essentially in some kind of formation of the company, what are they trying to do in the space, and this is essentially what led us to Fireblocks.
And so now that we're here, what does Fireblocks do?
Yeah, so what we basically build is a secure infrastructure, right? For financial institutions that are working with digital assets, blockchain, and cryptocurrencies. Now, what does it actually mean? We basically provide, let's say, on top of our infrastructure, essentially provide 3 main functionalities. The first one is custody and wallet technology, right? An extremely secure and yet high SLA, high speed, highly accessible type of storage for digital assets, cryptocurrencies, so on, that can be configured in a variety of custodian structures. That's component number 1. Component number 2, which I think one of the things that we are the most famous for, is the Fireblocks network, which is essentially an interconnectivity layer between different institutional market participants. Right now, we have about 130 different entities on that network, 30 of the top exchanges, and then about 100 other OTCs, market makers, lending providers, and so on, that through that network they can exchange payments and settlements without being susceptible to a variety of risks, both from an operational standpoint of accidentally sending an asset to the wrong address, to counterparty risk where one side basically sends the other the asset and the other side is not delivering, to regulatory risk, right? Or compliance risk, essentially, making sure that you're not receiving funds from some kind of, dodgy sources. So that's the second capability. And the third capability is mostly around which is actually quite relevant today, around the issuance. So we help companies that are issuing stable coins, and we are involved right now in a few really big projects around security tokens that we help them to essentially mint, burn, and distribute those assets.
Well, so let's focus first on the second one, the Fireblocks network. You mentioned how you're essentially providing custody services and kind of connecting many of the marketplaces, many of the exchanges that already exist for your clients. When someone is utilizing the Fireblocks network and they're doing a transaction, is that transaction happening on chain, or is it simply all happening within Fireblocks' own network?
No, it's on chain. Yeah, so I think this is something that usually confuses people, because there is a lot of discussions around off-chain settlements, which are, I think, philosophically, I'm actually somewhat opposing that concept, and I can explain why, because I think it sort of defeats the purpose of crypto in general, or blockchain in general, and sort of subverts the security and counterparty risk model. But all the transactions that Fireblocks is doing is on-chain, purely on-chain. And then the question is, okay, so what are you guys actually adding, right? So the simplest example, what we are essentially doing, maybe from an IT standpoint, is we are like the DNS layer for IP, right? So if 20 years ago, or like 30 years ago, if you wanted to go to Yahoo, right, you actually had to type their IP address. You had to somehow know what was their IP address, and you need to basically put it in your browser. And that was like really cumbersome, because who remembers that Yahoo is like 10.100.36 whatever, right? And then basically, and in order to essentially make the technology much more user friendly, those days you can essentially do yahoo.com or google.com or whatever, and it automatically resolves to what their IP address is, right? Now, the same problem really, to a certain extent, exists in crypto, but that problem is actually much more complex from a security standpoint, right? Because if I need to send you a Bitcoin, then or any other asset on a blockchain, then somehow you need to send me your deposit address, right? And then I sign on your deposit address, and then it's being sent to you. But how do I know that you're you, right? How do I know you're not being spoofed? And more so, if I'm actually an institutional player and I have multiple folks in the operation, how do I guarantee that that individual that is actually going to issue a transaction is going to send the transaction to you, which I'm supposed to, based on some agreement we have, and not going to pull his personal ledger nano from his pocket, put his own deposit address, and take the next flight to Venezuela. So those are real problems, right? And those are actually like the main operational problems that most of our customers have faced. To an extent, by the way, they're even more severe than the operational problems that you have around the like pure custody. How do I keep the private key secure, right? Because it's a problem that has like so many moving parts that the traditional way of really dealing with it is a variety of all kind of bespoke confirmation, right? So you will send me the deposit address, I'll call you, I'll ask you like, what are the 4 digits? I'll send you a test transfer of 0.001 Bitcoin. We'll do a video chat. And that whole process takes like, 15 minutes. We need 2 people to look at like, the entering the transaction. And with the first promise of the Fireblocks network is really to eliminate all that. You just click on the participant, click the amount that you want to send, and all that process is basically done in an automated way, highly secure, right? Without being susceptible to any man-in-the-middle attacks, with a workflow and approval on the issuer side, that they can actually designate who are the people that need to approve that transaction. And it's also actually even insured.
Wow. And so essentially for the clients, for all intents and purposes, he doesn't care about the IT. It's pretty much giving him a great or a way easier front end experience to interact with this crypto that has features, including you know, the ability to set, these are the people who have to approve, and it's pretty much adding features that institutions would be looking for onto what's available to them, you know, with the blockchains today.
Yeah, again, I think that it could have been also, I mean, we actually have some roadmap with partners that are focused on retail to extend some of that functionality to retail, because I think that at the end of the day, you know, if we actually want to push crypto to the mass market, we need to solve this problem for them as well. But on the institutional side, this problem is so severe that it not only impacts people on, you know, like just like a nicer interface. It impacts businesses on the bottom line, because without that, the operations become way more expensive. So imagine you need to do 100 settlements per day, right? How many people you need to actually have in order to facilitate that? And then also, what are the intervals that you need those people that they can do those, right? So if you actually need like 2 people in the same location to do this transaction, it really implies that you can only do it in a certain windows. And by the way, with all this COVID situation right now, it's not even clear, like, you know, if you can actually do it, right? So it also impacts on the top line, because the settlement windows become very long. You know, there is a lot of counterparty risk that is being created, and essentially just creates bottlenecks that after, you know, just to actually give a really great example, one of our customers, one of our sort of biggest customers is B2C2, that they're one of the biggest cryptocurrency brokers. I think they're the biggest one in Europe for sure. And the amazing thing that I learned, that when they shifted to use Fireblocks about actually a year ago, is that they told me those were like, you know, since we started using you guys, that was like, you know, some of the best months for us since we started using the service. Since we started using the service, those were some of the best months for us from a business standpoint. I asked them why, and what I discovered is that before Fireblocks, they were selling every 3 or 4 times a day, and that created just periods in which their counterparties couldn't trade with them because they would reach the maximum credit line, right? And once they shifted to Fireblocks, they're selling those transactions immediately, right? And then this problem doesn't exist.
You mentioned, you know, in an earlier answer that you're philosophically against sidechains. You want to go a little bit into that? Why that's so?
Yeah, not specifically. Like, you know, I think sidechain can be liquid, or sidechains can be a lot of different things. But specifically there is this concept of what we call like off-chain settlement, right? So an off-chain settlement is a structure in which you have a custodian. All the participants will open account with that custodian, but effectively that custodian has one big omnibus account, right? Where, you know, just like a pile of crypto that belongs to everyone. And then there is a database on the side that says, you know, I own, you know, Michael owns 1 Bitcoin, and you owns, like, you know, the second Bitcoin. And that database is just a regular database, right? And then if we want to settle, then they just, like, you know, change the record on the database, right? Now, in practice, actually, like, you know, this is the way that more or less the old financial system works, right? That's no different than how if we both customers of Citibank, that's the way that Citibank will manage an inter-account transfer, right? I think that philosophically, right, the way that the reason why blockchain was created is really to deal with this exact problem, right? Blockchain by itself is fundamentally a clearing layer, and every address should be an account, right? And then the fact that you're basically creating this huge pile and you're doing those off-chain settlements, it actually creates a huge amount of counterparty risk to that institution, right? Because what happens if that database becomes corrupted, or there was some, like, you know, small technical glitch, right? And they've done, you know, 10 different settlements, and at the end of the day, they come in and actually it doesn't reconcile with the fact that in the storage there are 2 Bitcoins, right? in the traditional markets, right, it's all virtual, right? So if they made a mistake, they can correct it, right? But in this in this space, if there are two bitcoins, there are two bitcoins, right? You cannot like generate those bitcoins out of thin air, and that's why I think that I mean, I have could probably talk about it for like 30 minutes, and I don't think we want to go to that length around that issue, but I think that some of the reasons why people are taking this approach is that they're not technologically savvy enough to actually do it on chain, which is the right way to do it.
But isn't what you just described essentially how centralized exchanges work? Where let's say I'm sending money to Binance, Binance has their Binance wallets. It's holding all customers' crypto, and they just have their own database. Isn't that just describe every single centralized exchange?
It does.
And so, and we see the faults in that. I mean, we see that exchanges are getting hacked. I mean, it proves your point perfectly. Where you know the safest place to keep your funds is not on a centralized exchange by any measure. So then now you know.
Yeah, it's by the way, it's not only that they're getting hacked. So like, you know, I think being hacked is probably sort of like, you know, the most catastrophic scenario where you see that issue emerges, right? But even before they're being hacked, what happens if actually Binance, they actually have a partial reserve, right? Of the Bitcoins that they think that they're telling you that you know, I think that I deposited 1 Bitcoin. You think that you deposited 1 Bitcoin, but actually Binance already gave someone else. And then there is like the rush to the bank, right? So all of us are trying to withdraw that Bitcoin simultaneously.
Right.
It goes back to this problem of like, you know, proof of reserve that existed.
Right, and then essentially we just replicated the traditional financial market on a blockchain. We're falling to the same problems that face the traditional fractional reserve banking system, but we just put it on the blockchain. So clearly, that isn't centralized exchanges are not the safest or the best place to keep your funds, but when someone's using Fireblocks, isn't Fireblocks, aren't you guys also kind of a centralized entity? If you're connecting, you know, all your clients in the Fireblocks network, aren't you that centralized power that you know kind of has all those same, I don't know, not maybe all the same security vulnerabilities, but don't you as a centralized actor in that Fireblocks network have security vulnerabilities?
So I think it's a great question, and it's a question that you know, both we're being asked about a lot, and I think that also internally for the team, it's a question that we are actually spending a lot of time, you know, debating internally. And the answer is, it's true that our customers, they have what I would say a certain technology risk to us to really build the technology in the way that we've advertised, right? But if the technology works as advertised, right, then the answer is no, right? And there are 2 reasons for that, right? The first reason is that on the custody side, we leverage multi-party computation, MPC, which is basically multi-party computation. So effectively, what happens is that although Fireblocks participates in the signature process, every customer has completely different, you know, public key, private keys, and also within the private keys, actually Fireblocks doesn't have even a sufficient amount of private key material to initiate a transaction, right? So we just basically a backstop for enforcing the policies that our customers are putting in, but the customer, whatever, if that financial institution is a hedge fund that they own and they control the funds, if that customer is, let's say, a custodian like Prime Trust, which is using our technology, then they're the actual custodian. They actually have the control and access to those funds. And every customer is both segregated and Fireblocks, and they actually don't have a counterparty risk to Fireblocks. That's like a very important observation on the custody side, right? Then on the networking side, it's true that Fireblocks is to a certain extent some kind of DNS provider, right? But first and foremost, our customers always, it's not like a closed or walled garden that our customers can only work within the Fireblocks network. Each one of our customers can still whitelist addresses. They can still operate outside and with entities that are not within the Fireblocks ecosystem. And worst case scenario, if they really want, they can always put the IP address. Okay, they don't need to use the data, so they can always bypass the mechanism. We don't log them in, and I guess with some of those integration and strategic initiatives that we're working on right now, we are sort of expanding this functionality to more institutional wallet and custody providers that will make we are very thoughtful about not basically like, forcing everyone to use us, and even on the technology side, not to create a material technology risk in the ecosystem.
Yeah, well,
it's a bit like, maybe, yeah.
Yeah, no, because you mentioned that you guys using MPC as multi-party computation. How does that differ from multi-sig wallets?
Right. So it's the same. I think that in general, it's the same concept, right? From a security standpoint, like security, from a conceptual security standpoint. So both MPC and multisig, and multisig is sort of the grandfather of the MPC, right? So the idea is quite simple. You distribute the trust, right, over the signature. So I always think about it as like some of the inception of DeFi, how you distribute, like locally, sort of like, distribute the trust between multiple participants. And what you're effectively doing, you eliminate the single point of failure of a single private key, right? So that's the concept of multisig is that let's take multisig for Bitcoin. You have 3 different key shares and 3 different private keys, and 2 of those private keys are required in order to sign a transaction, and that transaction is basically being validated by the blockchain, and the nodes, right, the miners, are essentially responsible to say, oh, I actually seeing a signature from 2 private keys that are attached to that wallet, and therefore I'm going to release or account for that transaction. MPC is the evolution. So MPC doesn't materially change it from that perspective, but it significantly improves the model on the operational side, right? So what are the gaps that we have with multisig? One, that it's protocol specific, right? On Bitcoin, you have multisig. On Ethereum, you don't have multisig. So you need to basically code it in the smart contract. You code it in the smart contract. If you code it in properly, then you have something like the parity hack, right? So it introduces complexities as you're basically trying to support more and more protocol. The second issue is that it's non-flexible, right? So let's take Bitcoin as an example. If we have a company, we have 3 employees, we decide that we need 2 out of 3 signatures, and tomorrow morning we're hiring the 4th employee, we cannot change it from 2 out of 3 to 2 out of 4 without actually changing the wallet address, right? So we actually need to create a new wallet, transfer everything from the old wallet to the new wallet, call all of our counterparties, tell them that our wallet address have changed. They will continue to send us to the old wallet. It's always a mess, right? It's basically just operationally a mess. And the third aspect, which is actually related to those 2, is that it became expensive, right? So as the fees increased over the last several months, because the fees are an attribute of the size of the transaction, multisig transactions became very, very expensive, okay? Now, what MPC basically does, it does more or less the same thing, but it does it on the signature level. So, and at the end of the day, there are only 2 signature, or majority of the protocols are either using ECDSA or EDDSA, which are basically the signature schemes, and MPC basically solves it on that. So from a public blockchain, there is only one address, but the underlying structure of the private key is essentially distributed. So it actually works across, as long as you have an MPC protocol that supports ECDSA and DDSA, it applies one implementation, or basically 2 implementations, apply for all the different blockchains, right? You're covering all the different blockchains in two implementations. And then, the fees are the basic fees, right? Because from a blockchain standpoint, they don't know that the miners don't know that there's actually an underlying distributed private key structure. They only see one address. And the third property, which is really, really powerful, is that you can add users and remove users, right? So you can essentially mutate the underlying structure. So that's the real advantage of MPC.
Oh, wow. Okay. So yeah, it is an evolution of multi-sig, and it keeps that same high security, but allows for way more flexibility and way more operability, easier operability. Thanks for explaining that. I actually did not know, and I'll park that away. Now you mentioned that assets are actually secured. Are actually insured on the Fireblocks network. Are they insured? What does that mean? Are they insured against everything, against user error, hacks, software bugs, and to what amount are they insured?
Yeah, so I think that the two main properties that we insured against, one is essentially cyber, right? So what does it mean, cyber? Either an external party that somehow is managed to compromise both us and the customer simultaneously, right? Because actually to affect the funds, you need to both impact the customer and impact us to get to the private key or change the software. And the second component is basically insiders within Fireblocks, right? So if one of our employees does something malicious, then change the code, and there is also protection against that, right? It doesn't, still the customer need to have proper operations and workflows, which can be facilitated through our platform. I'll talk about it in a second, but the cyber element covers those two. And then the really unique thing that we were able to obtain is actually what we call an E&O insurance. So an E&O insurance basically covers against software, it covers against errors and omissions, but that includes software bugs, right? So if accidentally we have an error in our system and we basically sending it to the wrong address, right? Although you send it through the Fireblocks network, the insurance actually would cover such an incident, which is really powerful, and we are quite unique, I think, in terms of having that type of insurance. Now, on top of the insurance that we carry, some of our bigger customers, they also are able to sort of go in with our brokers and basically obtain additional insurance capacity, insure themselves, and so on.
Mm-hmm. Wow, and I think that is a real sign of a maturing market. As insurance providers do come in and there's new players in the game, it really helps balance out risk and reward. And so that is very good to see. People say when mass adoption, when institutions. I like seeing insurance. I do think that does really help mature a market. So that is great to see. Now, let's say I'm using the Fireblocks network, and you mentioned that one of the great use cases for bigger operations and institutions is saying, hey, if I have if I want to do 100 settlements, instead of me going and me calling and doing a test transaction, and it takes time. It adds a significant amount of time onto just the regular block confirmation that would take. But how about using the Fireblocks network? Does it add any time onto a standard blockchain transaction, or is it literally press the button and then it's the same transaction time as any other blockchain transaction?
Yeah, it's the same transaction time as any other blockchain transaction. Plus, a really big thing that we've done recently is what we call the deposit acceleration program, or zeroconf. People call it like in a. But when you also transact within the Fireblocks network, what we've done is also the ability to confirm transaction, basically credit transactions in zero confirmation. So essentially, when the transaction is still in the mempool, right? So for example, we have already several exchanges that are part of that program. The first one that actually joined was Bitstamp, and then we had the FTX, LGO, and a few others that are joining in this program. And what that actually allows people to do is to once you send a transaction to that exchange, it being credited immediately, right? And part of it is the technology that we've developed around MPC that mitigates some of the risks around finality. So clearly mitigates the risk of double spending. And then in addition, it mitigates some of the risks around blocks being reorged, right? And that allows this sort of really fast on-chain settlement that people really want to see, even with assets that are really slow, like Bitcoin, which usually takes 15 or 15 minutes for one block, and usually people will wait for 6 blocks. And this this thing is so powerful that it makes the market much more efficient.
Mm-hmm. And when you mentioned that you have already exchanges, you said FTX and Bitstamp, are you saying that the exchanges can utilize this technology? You know, if FTX wants to send funds, they can have this zero confirmation, or any of FTX's clients, anyone who's utilizing their exchange gets this zero confirmation trade.
Yeah, so it's B. So you need to be a Fireblocks client, because essentially we need to be, our wallet infrastructure need to be on the sender side, right? But let's say that you're a trading desk, and FTX is one of the exchanges that you want to trade on. So you actually, when you send assets to FTX, it's being credited immediately. You don't need to wait 45 minutes or 15 minutes or whatever it is, which you would need to do it otherwise. It's really powerful, by the way, with derivative exchanges, right? Because if you look at what happened in March 13, if you have a very leveraged position and now the market crashes, right, then although you want to essentially top up the margin, if the exchange actually requires you to hold for one confirmation, then the network becomes congested, you might have not put the right fees, so on, and then you just your transaction is never being confirmed, right? And then you can basically blow through your position. Whereas with this technology, and FTX is a great example, because FTX, they have a fairly sizable derivative book, you don't run into that risk.
So you're saying even right now where gas fees on Ethereum are so high and the network congestion is pretty high, if you're a part of this, you could get that same zero confirmation trade and immediately solidify your position, even though the network is congested?
Yes.
And what is enabling this? Is it the fact that if you're in Fireblocks, if you're in the network, then kind of Fireblocks knows you have, the funds in your account because you could see it? Or is it just hey, you don't want to mess around because you're part of our network system? And then
no. So it's a technology solution. It's not like a reputation. We know you and we trust you, right? Like the goal here is actually, as I said, what we are trying to do is philosophically not to fall back into this trust type of situation. So how does it work from a technical standpoint? First and foremost, it has to do with the fact that your wallet is MPC, right? So let's assume that you have a Bitcoin in your wallet, and now you're sending that Bitcoin to FTX, right? So you need to sign the transaction, but also Fireblocks need to sign the transaction, right? So we will sign the transaction, and we keep the balance. We also see the balance, right? So we know that you have one Bitcoin. If you're sending that Bitcoin to FTX, we will sign it with you. But if you're sending that Bitcoin to FTX, and then you're also trying to send that Bitcoin to, let's say, Coinbase, right? Basically to double spend, we will not end, you can try to sign, but Fireblocks will not going to sign with you. Okay. So the first risk of double spend is mitigated. The second risk is what we call is essentially a block reorg, right? So basically a block reorg is a situation that you sign the transaction is now in the mempool, or maybe even was already confirmed once, right? But unfortunately, the chain is actually being reorged, and that block is being canceled, and that transaction is now being thrown away, right? That's or the confirmation of that transaction is being thrown away, and then essentially what we do, we basically because again we are a party for signing it, we basically freezing the funds that were allocated to that transaction, because they essentially go back to the original wallet. We freeze them, and the only thing that we are allowing to do with it is just resubmit it, right? So you guarantee that you might have like, some delay in that kind of situation, right? But the funds are there and you're going to get the funds.
Mm-hmm. And
right?
so I think that, yeah, so and that's a really ingenious solution. But it's kind of funny because we constantly see this clashing of two kind of, let's say two ideas, which is anonymity, being anonymous and having your privacy, but also kind of, this trustworthiness and this usability. This idea of zero confirmation trades only works because Fireblocks knows who's sending what to who, and that FTX has this in their account. So there's no real way of being anonymous here, and there's no real way of keeping people from knowing how much it's in your wallet using the system. So it does have the pros. Not everyone wants the anonymity. Some people want quick transactions. They don't care that people know, but we haven't yet figured out a way. Are you able to implement zero knowledge proofs somehow into this to enable to get kind of circumvent that and have that zero confirmation trades while also maintaining the privacy?
Yeah, so I think that I think that that people tend to look at it from like a very Boolean, black and white standpoint. But I think that that decentralization in general is actually it's a powerful idea, and that idea can actually work in sort of different resolutions, right? So the most trivial resolution is sort of the public blockchain resolution, right? Basically the idea, which is sort of like the fundamental idea in the Satoshi white paper, is how are you able to create a network where there is essentially zero trust, no one knows who the other party is, and how do you basically create you prevent fraudulent activities, that can be a variety of fraudulent activities within that network. And another way to phrase it is, how do you guarantee that no party within the network has a counterparty risk to another party, right? Whether that party is someone that's sending you the funds, or that party is a miner or a validator, right? So that's sort of the absolute, the macro level type of approach, right? Then you can take that approach and ask yourself, okay, can I take that approach and apply that approach on a micro level, right? When there is a subset of participants that, they don't want to have counterparty risk to one another, right? But they want to operate on a micro level, right? They don't care about the people, they don't care, if those three different participants want to somehow operate between themselves. They don't want to trust each other, but they also don't care about what the other 1 million other participants are doing, right? And I think the power of MPC, right? MPC and some MPC, trusted execution, there are actually numerous technologies that basically bring this macro concept into a micro level, right? Because one of the things that you can actually say about Fireblocks and other providers that are doing MPC is that we are decentralizing, right? We are decentralizing the trust. It's just that we are not decentralizing the trust over the entire network, but we're decentralizing the trust between 2 participants. We're decentralizing the trust between 10 users and so on. So that's more the way that I think about it. Now, is it possible to do zero confirmations in the macro level? I mean, that's more related to the fact that, yes, there are blockchains that are there are blockchains today that are confirming and much faster than Bitcoin, and they work, right? So that's essentially what they're doing.
Yeah, very good point you have there. When you speak to, it seems like you mentioned this at the beginning, that your focus is more enterprises or organizations, institutions, trading desks, not really, the average guy. You're not looking for the retail investor. When you speak to these enterprises and they're coming to you for a solution, what's their biggest concern? What's the biggest factor? Because besides the solutions you're already giving them excellent solutions, the problems they have, but what's the number one request that they're saying, we love the service you're giving, it makes our lives so much easier, but we wish that you would add this?
So it's a really good question. I think that trying to think if there is a commonality, because at the end of the day, we now have over about 100 customers, and they are so fragmented that I think that the use cases are always somewhat different, right? And some of them, their main challenge is more around regulation, and some of those guys, their main challenge is actually, I mean, a very common theme is actually this zero confirmation, off-exchange settlement, prime brokerage, right? That's like a theme that we're seeing today from specific customer segment, which is mostly around the hedge funds, prop trading desk, market makers. They're really interested in enabling more efficiency, enabling more capital, enabling more liquidity, and so on. And they need really those deposit acceleration, off-exchange settlement solutions. The banks and the more, I think, the more interesting guys that are sort of now entering this space, a lot of the conversation right now is around regulation, right? So they're trying to figure out, just almost like a ready-to-race solution that give them everything they need, but it's also very easy for them to explain to the regulator why this solution is compliant, right? And that's, I think, a second theme that we are seeing.
And how does using Fireblocks help with compliance at all? Where's the added value in compliance there?
Yeah, so we've done a lot of different things over the last 2 years around helping with that. So, compliance and regulation has many different layers. The first one was actually that we took a lot of time to really go and talk with the regulators. If it's the regulators in New York, the Security Exchange, in the Commission in the United States, Singapore, and so on. To really explain them what we do, what is MPC, what is the technology, how this technology is different from other things, because at the end of the day, the regulator really wants to understand those new technologies and what risks that they are mitigating, right? So are you able to mitigate a risk around insiders because you are able to split the keys and you're able to introduce workflows? Are you able to mitigate risks around, with your platform, are you able to mitigate risks around delivery of the assets and human errors, right? That it's basically the Fireblocks network. So we've done a lot of work around that. Then the second question, which I think is the most acute questions right now for the regulators in the macro level, is anti-money laundering, right? Because they're really concerned, rightfully or not, that as more and more participants join the system, although I think all the stats today show that the usage of cryptocurrencies for illicit activity is actually very low. I think this is what you see from the reports from the FBI and some of those really law enforcement organizations. They're afraid that they will basically lose their current tool set to really deal with this problem, right? So that's why you have the travel rule and some of those fairly aggressive regulations that actually, in some ways or form, they're more aggressive than what you see in traditional finance, right? So what we actually built is a set of built-in integration. So most recently, we partnered with both Chainalysis and Elliptic to really integrate all the KYT workflows into our platform. It's really powerful because our customers can just now automate all that, and reduces all their compliance and overhead. We are working on the travel rule. So there is sort of this vertically integrated stack that takes you that talks about mitigation around security concerns and mitigations around compliance or AML concerns.
And last question before I let you go, because I know you're busy. You mentioned before you were in Shmona Matayim. That's the Israeli Army's cyber warfare division. Are there any good military use cases for blockchain that you could see? I mean, you've been both on both sides of the coin, and you know what is going on. Is there any good military use cases as of now for blockchain, and do you think that they're looking into it?
Yeah, I don't know. To be honest, I've been there, I think like it's been 15 years, right, since since I left that part. I've actually like for another 5 years I did work in an organization that was selling to defense contractors and so on. But I think I think that some of the use cases that I've seen were mostly around supply chain management and some of those things that were really important for them. But I'm not sure if there is a very obvious use case for them around, pure. I hope that there are no real use cases for them from a military standpoint. I mean, I think that it's as more and more of our, I mean, clearly as more and more of our world becomes digital, then to a certain extent, if finance really fully moves into blockchains and predominantly private blockchains, then we need to make sure that those protocols are not only resilient against regular hackers, but also that they are, immune and protected against like a nation state actor. I mean, I think that a country moving to central bank digital currency and then, one of their enemies essentially is able to attack them by really taking the central bank digital currency chain or databases down, probably is going to be like really devastating for the economy.
Mm-hmm. And kind of connected, when most people hear about Bitcoin or let's take away from Bitcoin, about blockchain, essentially the major use cases we've seen have been financial. They've been sending value from one place to another, but cyber warfare, you come from a cybersecurity background. So would you say that blockchain would you describe it as more financial tool or more cybersecurity tool?
So I think that the interesting thing about blockchain is that it's really a cyber technology, right? Because it is able to remove trust by basically relying, by moving, I guess, like instead of trusting each other, we basically trusting now a cryptographic algorithm, right? To really perform as we, as we think that it performs in theory, right? Under all the mathematical proofs. And I think it has a lot of, I mean, I think the most obvious use cases are usually in finance, because the financial system is where you have this kind of really concentrated combination of trust and value, right? Where that coexist. So the power of blockchain really applies well to that. I think that there are basically adjacent use cases that are still fairly early, but I think that there is quite a lot there, which are around both digital identity that, if people will actually be able to pull this at scale, it's quite a powerful idea. And also, I think like things that are somewhere in between, like supply chain management and trade finance, where the combination of the ability to really track the record of custody on an element that is being shipped or distributed, so on, in the physical world, and basically represented in the virtual world, really adds a lot of value, adds a lot of efficiency, adds a lot of transparency. I think those two use cases are somewhat a bit early, but they do carry a lot of promise.
Mm-hmm. Well, Michael, I really appreciate you taking the time to kind of explain to me kind of what's going on behind the scenes, both at Fireblocks and as well as explaining interesting new technologies to me and to our audience. So I thank you for taking the time, and I know I learned a lot today, and I'm sure our audience did as well. So thanks so much for all of us at REIMAGINE 2020. I'm Yonah Hochhauser. Thanks for watching.